There's something that almost never happens in the markets, and when it does happen, it doesn't end well. Gold and silver don't rise together by accident. When you see these two fundamental anchors of wealth moving upward simultaneously, you are not just witnessing a simple market fluctuation or a temporary surge in commodity prices, but rather you are observing the ultimate canary in the coal mine for the global financial system. This extraordinary movement is a profound warning that the intrinsic value of fiat currency is beginning to evaporate under the crushing weight of unprecedented structural deficits and a rapidly expanding monetary base. To truly understand why this crucial event is happening right now, we must step back and look at the broader historical context, because history is an excellent teacher and it reveals that these patterns are part of a massive deleveraging cycle that has repeated itself predictably over the last 500 years. Throughout centuries of human civilization, whenever a dominant economic power has reached the absolute end of its long-term debt cycle, the exact same symptoms have emerged, and the cruelest consequence has always been the complete destruction of the purchasing power of the working and middle classes. Think deeply about the catastrophic financial damage inflicted during the horrifying hyperinflation of 1920s Germany, where desperate citizens literally needed wheelbarrows full of worthless paper money just to buy a single loaf of bread. A devastating situation caused entirely by a panicked government printing massive amounts of unbacked currency to cover its insurmountable debts. Or consider the pivotal paradigm-shifting moment in recent monetary history during the 1971 Nixon shock, when the United States officially severed the dollar's final tie to gold, completely ending the convertibility of paper money into a tangible asset and unleashing a dangerous new era of limitless fiat creation. These are not just dusty historical footnotes. They are crucial living roadmaps for navigating the exact economic terrain we find ourselves traversing today. You might be thinking that our modern, technologically advanced financial system is somehow miraculously immune to these ancient cycles. But the underlying economic principles of basic supply and demand, public confidence, and the inevitable mathematical consequences of excessive leverage remain completely unchanged. When a central bank creates trillions of new currency units out of thin air, they are not actually creating new wealth. They are merely stealing purchasing power from the money you already hold in your bank account, your wallet, and your retirement fund. It is exactly like pouring water into milk. The overall volume might increase, creating a temporary illusion of abundance, but the actual nutritional value is fundamentally diluted and ultimately destroyed. This perfectly brings us to a very relatable hypothetical scenario that clearly illustrates this devastating silent process. A story about a typical hard-working couple named John and Mary living back in 1970. John and Mary did everything exactly right according to the traditional rules of the American financial game. They worked incredibly hard, lived modestly below their means, and diligently saved a portion of every single paycheck to build a secure, stable future for their growing family. They completely trusted that their government and their banking system would honor and protect the value of their lifelong savings, allowing them to eventually enjoy a comfortable and dignified retirement after decades of grueling labor. However, because of the relentless and silent theft of inflation, the purchasing power of their saved dollars was systematically eroded year after year, transforming their once substantial nest egg into a mere fraction of its original worth, leaving them struggling to survive in their twilight years. The heartbreaking tragedy of John and Mary is the absolute climax of this recurring economic nightmare, representing the poignant, horrifying realization that diligent savers can have their life's work and retirement completely destroyed by external monetary decisions over which they have absolutely no control. This is exactly why inflation is universally described by economists as the cruelest tax of all, because it disproportionately harms the most responsible, financially conservative, and vulnerable members of society while simultaneously benefiting the most heavily indebted entities, particularly the government itself. Today, we are looking at macroeconomic data that is genuinely alarming, with the national debt to GDP ratio surging to levels that were previously thought impossible during times of relative peace and economic stability. We are hopelessly trapped in a vicious cycle where real interest rates must be artificially suppressed to prevent a total systemic collapse of the global debt markets. Yet this very suppression only fuels further inflation and aggressively drives the smart money toward hard, tangible assets. The unprecedented liquidity violently pumped into the financial system has created a highly dangerous illusion of prosperity. But beneath the shiny surface, the foundational pillars of our entire economy are severely fracturing under the immense, unyielding pressure of unsustainable multi-trillion-dollar obligations. This is precisely what silver and gold are signaling right now. They are acting as a real-time barometer of mounting fear and an accurate measure of the rapidly declining confidence in the ability of central planners to manage this complex deleveraging cycle without causing immense, irreversible collateral damage. When you closely monitor these precious metals, you are not just looking at shiny rocks pulled from the earth. You are observing the collective, terrifying realization of millions of astute investors worldwide who are rushing desperately to protect their families from the impending mathematical devaluation of paper wealth. The stark contrast between the prepared minority who deeply understand these historical cycles and the incredibly vulnerable majority who blindly trust the fragile system could not possibly be more pronounced. Those who take the necessary time to educate themselves and proactively adapt to this monumental shifting paradigm will be the ones who successfully survive the coming financial storm, while those who willfully ignore the glaring warning signs will helplessly watch their hard-earned wealth vanish into the ether. To safely navigate this incredibly treacherous environment, you must immediately adopt practical, battle-tested guidelines for wealth protection and intelligent diversification, decisively shifting your primary focus away from purely paper-based counterparty risk assets and toward tangible stores of value that possess undeniable intrinsic worth. You must urgently prepare your entire portfolio to withstand a prolonged, agonizing period of high inflation and deliberate currency debasement, fully recognizing that the extraordinary, desperate measures taken by central banks are absolutely not temporary fixes, but rather permanent structural shifts in the global monetary order. All fiat systems throughout the entirety of human history are fundamentally temporary, mathematically destined to eventually return to their true intrinsic value of zero, and we are currently undeniably living through the chaotic late stages of the current dollar-centric global experiment. The massive surge in gold and silver is the free market's way of screaming at you that the systemic risks are no longer merely theoretical. They are incredibly imminent, and they are compounding dangerously every single day. By deeply understanding the intricate mathematical relationship between the monetary base, the soaring debt to GDP ratio, and manipulated real interest rates, you can clearly begin to see the hidden, powerful forces that are actively shaping your financial destiny, whether you like it or not. You simply cannot afford to be complacent while the vital purchasing power of your life savings is being actively targeted by a massive structural deficit that absolutely demands relentless monetization to stay afloat. The ultimate goal here is not just to barely survive this painful transition, but to strategically position yourself and your family to actually thrive by aligning your capital investments with the undeniable, repeating realities of economic history. You have to seriously ask yourself if you are truly willing to let the precious fruits of your lifelong labor be quietly and maliciously confiscated by a corrupt system that perpetually prioritizes the servicing of insurmountable national debt over the preservation of your personal financial well-being. The canary in the coal mine is singing loudly, and the simultaneous explosive rise of gold and silver is the undeniable physical manifestation of a profound global loss of faith in the grand fiat illusion. as we witness these completely unprecedented economic shifts unfolding in real time. The heavy responsibility falls squarely and entirely on your shoulders to take immediate proactive steps and mathematically ensure that your family's wealth is fully insulated from the blind panic that inevitably accompanies a catastrophic currency crisis. It is absolutely critical to dive even deeper into the complex mechanics of how this massive silent wealth transfer actually occurs, because the more intimately you understand the granular details of the financial system, the better equipped you will be to fiercely defend your family's future. Let us closely examine the highly misunderstood concept of liquidity and how it functions as both a temporary savior and an ultimate destroyer within a fragile debt-based economy. When the central authorities unilaterally decide to violently inject massive amounts of artificial liquidity into the struggling financial markets, they are effectively trying to desperately paper over the deep structural cracks that have inevitably formed due to decades of reckless malinvestment and excessive unhinged borrowing. This artificial liquidity initially creates a massive euphoric surge in asset prices, making everyone temporarily feel significantly wealthier and more financially secure. But it is a highly dangerous, seductive mirage that completely masks the underlying economic rot. The fundamental, inescapable problem is that this newly printed money does not represent actual economic production, tangible goods, or real human labor. It is simply a digital accounting entry created on a screen that mathematically dilutes the purchasing power of every single existing unit of currency currently in circulation. This is the exact insidious mechanism by which your hard-earned purchasing power is quietly siphoned away, slowly at first, barely noticeable in your daily life, and then suddenly, as the terrifying momentum of inflation becomes self-sustaining and completely unmanageable by the central banks. If we look back again at the terrifying historical precedent of the 1920s and the Weimar Republic, the horrific hyperinflationary spiral did not happen overnight. It was preceded by long years of reckless government spending and aggressive money printing that slowly but surely eroded public confidence until a critical, irreversible tipping point was finally reached. Once the general populace collectively realized that the national currency was fundamentally compromised, a massive, unstoppable psychological shift occurred, triggering a desperate, chaotic panic to immediately exchange worthless paper money for absolutely anything of tangible, real-world value. This is the ultimate existential danger of running a massive structural deficit that simply cannot be financed through legitimate taxation or genuine economic growth, ultimately forcing the desperate government to rely heavily on the hidden, regressive tax of inflation to secretly fund its bloated operations. When you see gold and silver surging together in today's volatile markets, you are physically witnessing the very early stages of this exact same psychological shift among the most astute, historically literate investors and central banks around the entire world. They are quietly, relentlessly accumulating precious metals by the ton because they fundamentally understand that the current massive deleveraging cycle simply cannot be resolved without a massive historical devaluation of the underlying fiat currency. The global debt to GDP ratio has crossed a terrifying mathematical Rubicon, a critical threshold from which there is absolutely no historical precedent for a painless, orderly return to economic normalcy. We are fundamentally and mathematically trapped in a dark scenario where the absolute only politically viable option is to deliberately inflate the massive debt away, intentionally destroying the purchasing power of the currency in order to nominally fulfill completely impossible financial obligations. This is exactly why the highly technical concept of real interest rates is so absolutely crucial to your fundamental understanding of the current, treacherous financial landscape. Real interest rates, which are simply the nominal interest rates minus the true actual rate of inflation, have been deliberately driven deeply into negative territory, effectively punishing anyone who responsibly holds cash or traditional fixed income investments. You are essentially paying the bankrupt government for the absurd privilege of lending them your hard-earned money, a bizarre, completely unnatural state of affairs that completely distorts and destroys the fundamental foundational principles of free market capitalism. In a genuinely healthy, functioning economy, interest rates act as the critical price of money, naturally balancing the opposing forces of supply and demand while justly rewarding diligent savers for their delayed gratification and deferred consumption. But in our heavily manipulated, centrally planned system, the central bank has artificially suppressed the crucial price of money to desperately keep the massive global debt bubble from violently imploding, causing severe systemic distortions across absolutely every single asset class. This tragic reality brings us right back to the heartbreaking story of John and Mary, whose diligent, lifelong efforts to save for the future were completely and utterly undermined by this exact insidious dynamic. They blindly trusted the system, foolishly believing that a traditional savings account yielding a modest, nominal interest rate would be perfectly sufficient to protect their wealth and comfortably provide for their golden years of retirement. But because the real interest rate was secretly negative, their actual real-world purchasing power was mathematically shrinking every single day, leaving them increasingly terrifyingly vulnerable to the rapidly rising costs of basic housing, essential healthcare, and everyday necessities. Their extremely common story is a heartbreaking and raging reminder of the devastating, very real human cost of these disastrous macroeconomic policies, perfectly illustrating how the cruelest tax of inflation quietly, maliciously confiscates the life energy of the honest working class. To successfully avoid suffering the exact same tragic fate as John and Mary, you must proactively and radically change your entire approach to wealth management and immediately adopt a defensive strategy that fully acknowledges the undeniable mathematical reality of ongoing currency debasement. You absolutely cannot rely on the traditional outdated financial advice that was specifically designed for a fundamentally different economic era, an era broadly characterized by sound money, gold backing, and fiscal restraint that simply no longer exists in today's world. Instead, you must aggressively focus on acquiring hard assets that absolutely cannot be printed out of thin air, maliciously manipulated by central planners, or easily confiscated by desperate governments facing imminent insolvency. This is precisely where the undeniable intrinsic value of physical gold and silver becomes absolutely paramount, serving as a highly reliable, time-tested store of wealth that has successfully preserved human purchasing power through countless devastating monetary crises over the last 5 millennia of recorded human history. They are the ultimate, irreplaceable financial insurance policy, a completely tangible hedge against the massive systemic risks that are currently building to a breaking point within the highly leveraged global banking system. But precious metals are not the only viable solution. You must also carefully consider intelligent strategic diversification into other hard assets, such as highly productive real estate, essential commodities, and robust businesses that possess incredibly strong pricing power and the rare ability to easily pass on rising inflationary costs directly to consumers. The ultimate goal is to meticulously build a highly robust and incredibly resilient financial portfolio that can successfully withstand the violent economic shocks and extreme market volatility that are absolutely guaranteed to accompany the messy unwinding of this completely unprecedented global debt bubble. You must quickly become your own personal central bank, taking full, uncompromising responsibility for the absolute protection and continued growth of your family's wealth in an increasingly uncertain, chaotic world. History has repeatedly and loudly shown that during times of massive monetary transition, the true wealth of a nation is not actually destroyed. It is simply rapidly transferred from those who are completely unprepared to those who have wisely positioned themselves correctly. You have the incredible fleeting opportunity right now to be firmly on the right side of this historic massive wealth transfer, but it absolutely requires immense courage, fiercely independent thinking, and a steadfast willingness to bravely step entirely outside the dangerous comfort zone of conventional, mainstream financial wisdom. You must constantly, vigilantly monitor the crucial macroeconomic indicators, paying incredibly close attention to the rapid trajectory of the monetary base, the desperate actions of the central banks, and the subtle shifting tides in global market liquidity. By aggressively staying informed and remaining fiercely vigilant, you can accurately anticipate the coming massive changes and quickly adjust your financial strategy accordingly, ensuring that you are absolutely never caught off guard when the inevitable terrifying panic finally sets in across the broader markets. The extraordinary, undeniable surge in gold and silver is your ultimate early warning system, your incredibly personal canary in the coal mine, loudly telling you that the structural integrity of the entire global fiat currency regime is severely, perhaps fatally, compromised. Do not foolishly ignore this crucial, glaring signal, for the catastrophic financial damage caused by a systemic currency collapse is incredibly profound and incredibly long-lasting, negatively affecting completely unprepared generations to come. You must ruthlessly prioritize the absolute financial security of your family above all else, eagerly taking the necessary bold steps today to completely insulate your hard-earned savings from the incredibly destructive forces of rampant inflation and deliberate currency devaluation. Always remember that the ultimate, unshakable foundation of any stable, prosperous society is sound money. And when that crucial foundation begins to inevitably crumble, the entire towering economic edifice is at immediate risk of total collapse. We are currently standing right at the terrifying precipice of a truly monumental, historic shift in the global monetary order, a massive transition that will fundamentally and permanently redefine the true nature of wealth and value for many decades to come. The vital lessons of history are incredibly clear and completely unambiguous. Those who blindly trust in the empty, broken promises of unbacked fiat currency are mathematically destined to lose their purchasing power entirely, while those who wisely anchor their wealth to tangible, hard assets with undeniable intrinsic value will not only survive but massively prosper. As you deeply reflect on the powerful insights and the crucial historical precedents we have thoroughly discussed, you must fully recognize that mere knowledge alone is absolutely not enough. It is the swift, decisive application of that exact knowledge that ultimately, finally determines your family's financial destiny. The critical window of opportunity to fully prepare is rapidly and forcefully closing as the destructive forces of massive inflation and insurmountable debt continue to aggressively accelerate far beyond the feeble control of the panicked central planners. The extraordinary, extremely rare convergence of simultaneously rising gold and silver prices is absolutely not a random market anomaly. It is a profound, undeniable, and fundamental mathematical warning that the current fragile economic paradigm is finally reaching its absolute breaking limit. You alone hold the incredible power to fiercely protect your family's future, to decisively break free from the dangerous cycle of blind dependency and severe vulnerability that completely characterizes the modern, highly manipulated financial system. The question isn't whether you should pay attention. The question is, what are you going to do with this information?